Hi, good afternoon. Welcome to the marketplace. Coming up, dollar demand by businesses remains high despite record-breaking reserves. How effective can the Bank of Ghana be in managing currency volatility in the near term? We will discuss. Also coming up, banks justify the rationale behind the February reduction of the Ghana reference rate. Ahead on the exchange, we'll speak with Sheriff Gali, Chief Executive of the Ghana Chamber of Young Entrepreneurs, to discuss what the rate cut means for businesses. My name is Darryl Kwao. Thanks for joining us. Details coming up. Thanks for staying with us, everyone. First up, dollar demand by businesses remains elevated on the foreign exchange market despite new data showing the country's reserves position reached record highs at the end of last year. The following report highlights key industry developments and their impact on the city.
Auction results over the past 2 weeks reviewed by Joy Business showed that demand has picked up again over the past 5 working days. This is coming after things slowed a little bit last week with regards to dollar demand. For some market watchers, it was the expectation that after the Bank of Ghana released the data on the country's reserve position, that should have influenced the market in terms of demand. For instance, last week, bids from businesses through the banks was pegged at more than $700 million. However, the Bank of Ghana only sold $260 million. The development has pushed the cedi's rate of depreciation against the US dollar further from last month to 4.16% in the first week of this year. But the Bank of Ghana is insisting that this development should be seen as normal blips and expected. This is because in the first quarter of each year, these developments are expected. However, the assurance is that they will step up when needed through their market intermediation program.
Joining me on Zoom, Associate Professor of Finance at the Andrews University in the U.S., Williams Pepa. Good afternoon to you. Talk to us about the main factors behind the cedi's mixed performance in the interbank versus retail markets over the past fortnight.
Good afternoon to you, Darryl, and I hope you are doing very well. Let's remember, in the first quarter of every year, a lot of activities happen. So the first one is that most manufacturing companies and individual importers who ordered items or goods on credit within the fourth quarter of last year, most of their bills will be due for payment in the first quarter of this year. Then also the Chinese New Year, which is this year, so from February 17th and it will run to somewhere 21st, which is a holiday. So other importers who want to import items from China will also want to need a foreign currency and import so that they will not be out of stock. So you see that kind of pressure. And then the third element is that a lot of multinational companies also, after their performance in last year, will declare dividend and will repatriate their dividend out of the country. So the first quarter of every year is where you see that kind of pressures coming out. So the likes of MTN and the rest will have to repatriate money or foreign currency out of the country. And that kind of money volume is huge. There is also the trend that the central bank is now checking that whatever we are trying to import is backed by the correct or the right documents. So we know people will take the advantage and say they are importing something, but indeed they are not really important. So these are some of the things that are happening. The good thing that we have seen from for the forex market is that we are seeing a close margin or gap between the interbank market and then the forex market. So we call it the market is correcting itself. That gap is closing up. Whereas the interbank market rate is showing a depreciation, you've seen a trend that the forex market is appreciating, meaning that the gap is closing. So it's good because the central bank is now making forex available for importers. They are not relying more on the forex market or their boutique people to provide the forex. So these are some of the three. But the main trade items that I've mentioned are the causes of the moving or the demand putting pressures on forex in the Q1 of 2026.
Yeah, you talk about the seasonal import demand. How significant is that in driving the depreciation of the cedi against the US dollar?
I mean, for the dollar, this is, well, in the past, it was very significant. But in 2026, once the central bank has a program, which now they announce how much foreign currency they are going to bring into the market for anyone who needs it to be able to buy, it reduces that kind of speculation and uncertainty. So expectations is now being managed because central bank is now telling us how much forex they want to bring into the market. As to actually if they will give that amount of money into the market is something to be looked at. We know that in Q1 has not really ended, but if they are unable to provide about 200 million and then out of a demand of 700, there is still room. I think they mentioned that they were going to bring about 1.3 billion US dollars in Q1. So Q1 is still not ended, which means that central bank is still prepared to bring the funds as and when is needed to support import. So the pressure, in my perspective, will come down if central bank brings in more forex to support this kind of demand that we are seeing.
Well, speak of the central bank, they've got the international reserves at record level. So how can they be effective in managing currency volatility in the near term?
So they have to watch the demand as it's coming, and our balance of payment, we must make sure that at least we use it at the right time, at the right moment. In a situation like we all know, which the central bank they have the data to see that yes, indeed, Q1, this is the time they need to pump more forex into the market. So this is when you use your balance of payment to be able to support your demand. And also they must also check the exports. If there are some payment that must come in which is not yet received, they may have to follow it up immediately to make sure that we receive all our forex to be able to support these transactions.
Well, are you able to make any projections of the range at which you expect the cedi against the dollar over the next, let's say, 2 months, and what could influence the deviations?
I mean, the deviation is between 11.5 to 12.5 to a dollar, and that is going to be the range until anything changes.
And how should businesses and investors position themselves amid this currency fluctuation we're experiencing?
So businesses must plan very well. They must use forward trading if they anticipate that they have some bills to pay. Now all the banks understand forward trading, so they must also learn how to use forward trading to be able to hedge themselves against these volatilities in forex market. So these are some of the major strategies that they can use to hedge themselves. When they talk to their banks will now be able to place orders to be able to get the forex to come in. And in terms of their pricing as well, they should price in, even though they price into the future, they should price in such a way that they will not lose out because of the volatility in the exchange rate.
All right. Thank you so much. Associate Professor of Finance at the Andrews University in the U.S., Williams Pepper.
Thank you very much.
I appreciate it. You're watching The Marketplace. We're taking a short break. We will be right back. And welcome back to the marketplace. Banks have justified the rationale behind the February reduction of the Ghana reference rate. Data from the Ghana Association of Banks shows that industry players lowered the rate by around 1.1 percentage points, bringing it to 14.58% this month. However, given current economic developments, some businesses had anticipated a larger cut to the policy rate. I've been joined on Zoom for the exchange by Sheriff Gali, Chief Executive of the Ghana Chamber of Young Entrepreneurs, to discuss what this rate cut means for businesses. Good afternoon to you, Sheriff. So how are young entrepreneurs reacting to the 1.1 percentage point cut in the Ghana reference rate? Is it enough to ease borrowing costs for them?
Okay, so thank you very much, Daryl. Can you hear me?
Loud and clear.
Am I loud and clear? All right, so apologies, I'm not at my usual convenient office space. Yes, but Daryl, the truth is that we welcome the reduction in the reference rate, but it's quite unfortunate that the reference is not connecting to the gains we have recorded so far, talking about inflation now hitting a single digit and even going further, and then monetary policy rate seeing a drastic reduction. We had expected that it would reflect same with the reference rate, of which we all know that the reference rate is what the bank benchmark their loaning price or price their loan against. So we would have expected that it comes down. But as it stands now, Daryl, some commercial banks are still doing up to 22% and upwards, which for us, it makes the whole ecosystem not look promising, because if there is some sort of economic gains, and there have been some steady progression in the monetary policy rate and all of that, and inflation, and yet the things that enable SMEs to go to market, which is one of the things that is lending costs, is not being reduced that much to reflect. It's worrisome. But however, you have to be grateful with the little you get. So that is the point. We are okay, but the 1.2 or so reduction is so very insignificant. We expected more. And after listening to the Association of Bankers, we actually engaged them. They have a lot of ideas or reasons why they have to still benchmark their loans at that higher rate. But you see, the problem is that, especially when it comes to the young people who own business, they are receiving this with a heavy blow. Because originally, we are talking about high cost of lending, which, whether rate was lower or higher, young people still had issues. The issues, not just with the rate alone, the issues has to deal with the fact that documentations, collaterals, and all of those things that play in the, a young person getting the funding, it becomes a problem. So yes, we appreciate the reduction, but we had wished it would be, it should have been more, and that it would be better.
All right, let's talk about expectations versus reality. Many businesses expected a bigger cut, but like you point out, the banks are saying there are other economic indicators. Do you buy that?
Daryl, they said the banks are.
I mean, the banks are their argument is that there are other economic indicators for which rates can go as low as we would expect it to.
Yes. So like I said, you see, the bankers are also business people. And as a leader of young entrepreneurs, I would not be so straight with what we do, only thinking about our young people, but not also thinking of the bank. So when you listen to the Bankers Association, all that they also laid out, that has to, yes, the reference rate can be lower, but we will still price our loan to ensure that we're able to cap the risk level, the cost of even administering a loan. All of these things come to play. But you see, Daryl, the point is that you have monetary policy rate that has reduced very drastically. Inflation has gone so down. Why are banks still keeping on the pricing so high, even given all that has to take, the risks, the loan risk calculation, the cost of giving the loans and all of that? This is what we do. And when we go to the market to complain about the fact that inflation has dropped and market women are still holding their prices high, and you see even banks are doing the same thing. So we should tell a better story. We should be able to tell the ecosystem. And that's why somebody told me yesterday when we're arguing this on another media is that business people are our own enemies. You know, the person was right to say that because banks are giving you reasons why they can't just bring their pricing down when it comes to loan. And now government has said that, but we have eased. We are lending to you at this rate. Why don't you do that? But they are also telling you their reasons. So who would then reduce what? Then you expect my young entrepreneurs to say that go to market with your product and reduce the price. When, if they go to loan or go to get credit, the credit is not going to be reduced. So how do you expect a young entrepreneur who has an agri product, who has the product in the market to go and reduce the price? That's why they also keep it there. So it's a whole system, a chain of issues that we need to be deliberate. We need to be honest with ourselves as a business ecosystem. Help the government. The government is trying. How do we also support the government? So yes.
Yeah, so with the banks justifying a modest rate cut, I mean, let's talk about access to credit issues. Do you think young entrepreneurs are able to access loans easily, or are there still significant barriers?
So, like I said, there are so few issues with the young people accessing loan. But I have to also give it up for some of the banks. We have seen banks, I may not be able to mention their names, but we've seen banks that have come out with tailored programs, facilities for young people. I have served on some of them. I have been engaging some of them. And you realize that they have tailored facilities for young people whereby they have taken away some of the requirements. But you see, it is not general, and it is just a temporary program. Most of them are even backed by MasterCard Foundation. You will know what I'm talking about. You understand? So it is not in the DNA of the bank to have a single out product for young people and young women, but rather because maybe MasterCard or another foundation is funding them, then they have a product, say this is for young people. The question is that after that, what next? I know a bank that has a product because I engage them. For young people, that is at 9%. It has been happening, I think it's even started last year and up to now. But that, if you look at the underpinning aspect, it is supported by MasterCard Foundation. After MasterCard, the bank don't have any business dealing with young people. So we go back to what? The normal. And the normal is where we complain. Young people do not have the collateral that they ask for. We do not have some of the documentations we ask for. So can banks be honest with themselves and start creating youth-centered products for youth without necessarily waiting for MasterCard Foundation, GRZ, or the rest to fund them before? So that is a problem. And I think that we should even move away from talking about donor support product to talk about how can we ensure that at least there could be a policy. I'm actually engaging the higher hierarchy. There should be a policy that is given to every bank that before your license can be renewed, or your license will be renewed. You should be able to do, your loan book should be able to do some sort of percentage going to young people. So if you go to India, they have a policy like that. Before any bank can get your license renewed for continued operation, your loan book should see 70% funding going to traceable SMEs that can be traced. We could do the same thing in Ghana. We are not forcing the banks, but just to, encourage young people to do business. Every time it's like government is the one that is supposed to provide funding for the young people, but the commercial entity is not seeing the young people because we are high-risk business cohort and all of that. We understand. But you can devise product that can help these young people. And so we need to move away from the donor-backed programming or product to coming out with a policy that we can be able to support young people. If not, it doesn't look fine at all, and young people still struggle. And I'm telling you today, even if reference rate reduced to 9% or a single digit, and banks are loaning at lower, it will still be difficult for young people to get the funding because most of them do not have the collateral and other things that are required. Yep.
Sherry, we've got 1 minute. Let's talk about impact. How might this rate decision influence investment and expansion plans for startups and SMEs in Ghana?
So yes, the first thing it would impact on investment is that, you see, when you go out to look for funding to support your business, investors should consider all of these policies, the reference rate, and all of those things. Imagine it's an equity investment, and the person is even giving it to you like Daryl, but they'll benchmark it on reference rate, right? And that would be very difficult for a young person. That I'm talking about debt. That would be very difficult for a young person to get through with an investor who want to put investment in their business and they pay back, because the investor is going to benchmark it on the rate. The only good thing is when the investor is coming in as, let's say, an equity person. That is far better. But then generally, it also, when your rates are a bit low, that also affects other investment portfolio. In some countries, we've seen that when your monetary policy rate is low, there's some kind of rise in the investment portfolio that the investors can put their money. If we can have that and see some adjustment, then I think that it would also enforce or encourage investors to put in. Now, let me, because of the time, for the young people, we think that, yes, this reduction should reflect. If not, the impact is huge. At least if the reduction reflects, young people can confidently also put together their documentation. That is why associations like us are there, the Ghana Chamber of Young Entrepreneurs, to help young entrepreneurs put together their documentation so that they can be bankable. But if the rates are high, no matter how bankable the young entrepreneurs, they even fear loan. The moment you talk about bank loan now, they don't want. So they are waiting for grant, they are waiting for donor funding, and you know those ones are not sustainable. So this is where I think that we can play a critical role to ensure that there is programs for youth entrepreneurs, product for youth entrepreneurs, to ensure that the rates reflect in our loaning so that young people can also confidently borrow from banks.
All right. Thank you so much for your time. Sheriff Gali, he's Chief Executive of the Ghana Chamber of Young Entrepreneurs. And that's it for the marketplace. More news on our website, myjoyonline.com/business. Do we have that for you? Okay. myjoyonline.com/business. That's where to go for the day's latest stories. Thanks for watching. We will be back same time next time.